Okay, so now I'm gonna record uh, the transactions for $331 profit. Now, this was taken on the 6th of February. It kept it in for 6 days to earn 331, so really bad profit to loss ratio. I could have lost 3,000. I guess that's why the 6-day mark. Let's look at what it actually looks like. So, took a shot here. Again, exhaustion, expecting it to go down. It kind of ballooned up, and I kind of finally settled in for a profit. I'm going to look at the 1 hour time frame. It gives you a better picture. So for some reason, I thought this was it. And again, that's the danger of taking an exhaustion play, is you don't know when it's going to settle in, or I guess when it's going to turn direction. It took a while and then it turned, but I ended up with a massive uh waiting period for this one. So yeah, so exhaustion play gone wrong is basically what this is. So my notes here that I wrote were: I saw the market turn on the 4 hour time frame downwards at the 220 EMA and thought the market is going to reverse. However, the market did not reverse at that point and continued a strong rally up to the reverse of the entire um, reverse the entire loss from the previous session. At some point, I was minus 3,000 down, but by keeping the trade active for so many days, I will recover, lose much more over the next few trades. I need to be cautious about adjusting my stop loss. I did this again, and it's kind of a habit right now because I could have gone down to a much bigger drawdown. The next time the market falls dramatically, be cautious and don't try to predict that the market will go up to only a certain level and then reverse down again, because it will continue on its path upwards. A special note: never take a mean reversion trade during an opening range breakout, especially during the 9:30 to 11 a.m. when the momentum in the market is the strongest. Yes, that's a really important note. If I had taken a buy order on this trade, I would have made 10,000 on just this trade. Also, keep an eye on the 5-minute time frame for confluence. The market had not broken to the lower time frames, but I went ahead and took a mean reversion trade. Never take a mean reversion trade until the market shows that it's broken the lower 5-minute time frame. I also need to stop adjusting my stop losses. That is such a bad habit, and I'm struggling with this habit. It's a serial habit. I could have escaped with a small $200 loss, but instead holding it for a week, the potential much bigger loss, I also took this trade after a string of profits, which made my mindset overconfident. So yeah. So I wouldn't say this is the right side of the B. I think this was my old terminology. This is going to be an exhaustion play. So let's document this exhaustion play and the 5-minute disco exhaustion. I did this. Yeah, so those are the notes that I would previously take. I would say at the 5 EMA, and I sold it at greater than 5. And exit. I'm looking for the 1 hour, but I take it so it's greater than 5. I took my entry. In the mature, bull mature. So I got the entry. Actually, it's bull fresh. Bull fresh means I took it just at the crossover. Entry. Exit. Great, I will give this an F. What else can I see? Okay, so I think I got most of my notes down, and I think that's it for this one.